All right, let's head to the markets now and see how that's doing. At the close of trade yesterday, we did see a moderate gain at the NGX, a 0.05% increase but remember that we had dropped up to 98,169 right there. Getting further away from that, and also lost some money from 56 trillion to 55.5. Even though yesterday there was a gain of 27 billion, that hasn't been enough to cover up for the losses we've been recording in the last couple of weeks. So we look at the sectors now. Trust that the most liquid sector would be hugely affected. It hasn't recovered. There's still profit taking on it. More than 1% was dropped yesterday on the index. Consumer was also down, even though it's marginal 0.05. Industrial goods, first time in a long time, unchanged. Insurance, however, got some attention right there, talking about the penny stocks, and oil and gas has its status, wants to be known as an unchanged sector at this time. So let's talk to, for the market analysis, we'll talk to our guest. Tajuddin Ibrahim is the Director of Research and Strategy with Chapel Hill Denham. Good morning, Mr. Ibrahim. Thank you for your time.
Good morning. Thank you for having me on the show today.
Yeah, so we look at the market and we see movement, not so good figures for the NGX, but the fixed income looking good, yields going up, and it seems this is going to be the trend for a while.
Well, I think that is one thing that we have to correct there. We have a situation where the stock market is sort of slowing down in terms of the returns on a weekly basis within the past sort of 3 weeks, and at the same time we have a situation where the yields on fixed income instruments are rising. So in finance and economics, what we currently are seeing is a situation where both markets are bearish. Bearish in the sense that the stock market is shedding some points, returning slightly negative numbers within the past sort of 2 weeks, and the fixed income is witnessing broadly higher yields, which also means a bearish sentiment, because when yields rise, bond prices fall. So we have that situation at the moment where both markets are largely speaking bearish. So on a mark-to-market basis, bond investors are also losing money. But when you are looking at new positions being taken by bond investors, then one can talk about such bond investors making money in the future because of the elevated yields we currently have in the market. And I think the broad development is part of market dynamics.
So now that the federal government has hinted that I think by June or so they'll be going to the Eurobond market, what's going to happen to the domestic markets?
So the domestic market will remain there, and because we have a situation where some investors are just going to stick to the domestic market. Let's take a look at the pension fund administrators, for instance, where we have well over 18 trillion naira in assets under management. One would say we will still see a situation where the sector is still exposed to the local market, because there is no significant provision for them to invest in to invest abroad and to also invest in dollar-denominated assets. So they still have to stay with the Naira assets in terms of investment. Also, we have insurance companies, that have liabilities that, they have to match with the corresponding assets. Those will also still have to stay with the domestic, the local market.
All right, Tajuddin Ibrahim, thank you so much for your views. Director, Research and Strategy with Chapel Hill Denham, thank you for your views this morning.